Just a quick market recap from my prediction last Friday about where prices would be coming into this week. So here we have a key level, or this is the dollar index here. So I said in my prediction that heading into the FOMC meeting, we were going to see a strong dollar rally on the news that, or on the hype that the Fed might move in favor of hiking interest rates, which is a win for the dollar. It makes the dollar worth more. So here we are. This was last Friday. As you can see here, the date. I was saying buy the dollar. And here we are. And it's definitely surging. Now, the correlation between a strong dollar means pressure on equities and oil. So let's take a look at crude oil. Last Friday, I said this is a strong sell due to the pressure being exerted on it from a strong dollar. I said sell oil here on Friday at $47, and I said it's likely to go from 43 to potentially even $41 heading right into the meeting. And where did we get? Right around the $43 range, and potentially still some more downside. It does look like kind of wants to bottom out, but again, it's really strongly correlated with the dollar, and we should see this continue to fall off the mat, I would venture to say, heading into next week. And then it's really going to find a bid at 40 to 41. And then as soon as the Fed says, no, we're not making a move, this thing is just going to skyrocket as the dollar collapses. This thing is just going to peel rubber and head right back up to like 45 bucks in a matter of a day or two. And then we'll take a look at the S&P 500 as just to kind of gauge. I said that on Friday, this market sell-off was way overdone. Obviously, it's going to get a dead cat bounce. That faded. I did say that on Monday or Tuesday. No, not Monday. I said Tuesday or Wednesday, the bottom should be in, and at that point, it's time to go long. I made that prediction over here. Or sorry, over here. And yeah, so here we go. You can see here Tuesday, Wednesday, bottom, bottom, and now it is uptrending. We had a slight pullback today, more or less just consolidation, healthy pullback, good level of resist or support here for it. Bounced around at that key level there, 21.25, held very nicely at a nice double bottom there, and now it's starting to trend upward again. And I would venture to say that this kind of is not going to get very exciting quite yet. It's really just going to kind of mull around in this range for a while. Might gradually uptrend. It's tough to really say. It might retest these lows, but either way, you're more or less not really opening yourself up to any extreme risks by buying options in this market environment. And then what you can really expect to have happen here is, like I said, the dollar index is really where all the cards lie. And as soon as that falls down and the house of cards collapses on that, in a classic buy the hype, sell the news market run up, when the dollar collapses, the pressure on equities obviously drops, and then the fact that the dollar is going to fall, and the fact that um, oil will be surging, and a guarantee that the Fed's not making a move in September to hike interest rates and potentially won't even make a move in December, if at all, even in this year, means it is like all turns in headwinds turn to tailwinds, and we're at all-time highs in no time on the S&P 500. And just to give you an idea of what that looks like, because we're still not that far off from it. All-time high 2191. I'm really saying easily 2200 by pretty much easily by the end of the year. We're at 2200, if not higher. So That's my market recap for the week. We'll see if it's right.